Okay, now we're gonna go over um, using Ethereum to hedge just an Ethereum position, um, or to hedge kind of all your alt positions because it's the only option that you have unless you want to short alts. Um, it's a decent way as Ethereum kind of being the king of alts. It would be a fair way to do it. So I'm gonna put 2 to 10 is my range. Once again, the time frames as you go in this, I'm probably going to be looking 6 to 8 weeks out. It's just like, a position trade. How long you think it's, going to take to play out? You'd be looking for the same sort of time from this. So a falling wedge that took 3 months to play out, and you're looking for, 382 to 618 retrace. I mean, it's probably not going to take 6 months to get into that retrace area, but you're probably going to need at least 4 months. So similarly, um, that's how you do that. But you can go into any of the different months. This, you have to have one full Ethereum to do it. I don't think you can do portions. You can do portions on another site that's not for US users. Um, but you can go further away from the money to reduce your costs, which is a beneficial thing. I mean, it at least gives you some coverage and kind of acts as a stop loss for that you don't have in for your entire portfolio, your entire hold portfolio, so you don't freak out if something, China says something or something does move around. Um, so just for this one, I don't even know. ETH is trading at uh, between 45.51 4600. It's based upon the spot and the different futures contracts. There's premium built into the futures. So a 15% move down. So we're looking at $4,000 puts. Um, so if I were going December 21st, that gives me 2 months. Um, it's cost me in between 425 and 524. Um, if I sit there long enough and I'm the buyer of this, um, I'm probably going to get filled closer to 425, but depending upon price movement, all that stuff, sometimes you can go right in the middle. Even this, you can put the mid and see if, I don't know, I assume that since FTX is taking this over, they just have what's called market makers sitting there and they sit on both sides. And so if you sit there and put in an entry price and you don't get filled, don't immediately go change it and then keep changing it as you watch their price keep changing because that's an algorithm just changing price on you. So I mean, you're never gonna get filled that way. So just sit there at what's a fair price and what you calculate in your head. Um, so I mean, on this one, say we're willing to spend 45, 50, 455 is somewhere in the middle. But that's about 10% of one ETH. So we're willing to risk 10% of an ETH that basically, if price drops a little over 10%, we're going to get all our money back. Not exactly how it's going to work, but pretty close. If it drops below 4,000 prior to December 31st, 2021, which is your expiration here, you're allowed to sell that ETH for $4,000. You're also the you also can come back in here and sell your put for generally what's called better than parity. So say price fell to 3,600. Well, you'd be getting a profit of $400 for letting your put go on this for at 3,600. That would be a, 18% drop from there. But you paid $455 for this. So, I mean, is that really the put covered you some for the drop down, but you paid for it. So a lot of times when you'll come in and see this, the earlier it happens, the more velocity it's going to have and dropping down. But if this drop down, if spot ETH spot price dropped down to 3,600 with more than 2 weeks to go in this thing, so by like December 15th, you can bet this is going to be probably 1.2 times parity at least. So parity would be, it's going to be more than that. So you're probably looking at $600 to $700. It would be my guess. Usually I'll go up to like the next strike and see what that's trading at. And so this is 879, so about $1,000 down, with some time left on it. And as you go closer to home and closer to parity, so right now, November 26th, 2021, $4,500 put is costing you about 370. So, and price is sitting above it. And if you go both where I guess we'd use, it's in between, it's right at 4,500. So go kind of mid price on those. I open up the mid. I don't know why it's not letting me turn on mid. But so there they go. 385 plus 736. So 1100 ish is the expected move up or down by November 26th from 4,500. So up to 5,600, down to 3,400 is the expected implied volatility range that the options chain is showing. Now these tend to be a little bit more expensive options, but like I said, it's US regulated. It's safer to put your stuff on here. And this is one of the only ways I can know that you can really, if you're holding a ton of alts offline, on a ledger, that you can kind of hedge your portfolio a little bit against some volatility. So that's it.